Hello traders, and welcome to the last day of 2021, last day of trading as well. Let's just quickly check out what is going on the Forex calendar today. As you can see, none of the data had been published during the London session yet, because mostly those markets will be closed today. But we got interesting data from overnight from China. PMI manufacturing data has beat the expectation just marginally, but it's always something. The actual reading was 50.3, which was better than the forecast of 50 and the previous reading of 50.1. The non-manufacturing PMI has beat the expectations as well, 52.7 points versus 52 expected and 52.3 last time. During the New York session, there is only one data scheduled for release at 7 p.m. We got Baker Hughes US rig count for all of you crude oil traders. So doesn't look like a busy day today, last day of the 2021 New Year's Eve. Let's just check quickly what is going on the majors. US dollar will be the first major we are going to check out. As you can see, for the last few weeks, we've been trading inside of this narrow range. This is exactly from the 1st of the December to the last day of December today. This narrow range is typical market behavior at the end of the year, at the end of the trading week, of the trading month, of the trading quarter, and of the trading year. So most of the market participants are closing their positions. They are withdrawing the money from the markets. They are getting a little bit more focus on some different parts of their life, and the liquidity is then a little bit lower. So it means the volatility is a little bit higher because there is not enough price levels on the market, so the price jumps. In the case of the euro to the dollar, from the technical support at 1.1225 towards the nearest technical resistance at 1.1373. So we're bouncing up and down, up and down, up and down until the liquidity will return to markets, most likely in the second week of the January. Generally, the euro dollar is trading inside of the channel, which means we are right now in the downtrend. At least this we are in the downtrend since the middle of the 2021. This is the high of the May 2021. Since then, we got a breakout below the long-term trend line, and then of course below the key technical support 1.15, and then below the 1.1422. So right now we are trading very close to the level of 1.1167, 1.1153, which are the lows of the middle of the 2020. Those lows were made in the June 2020, and the lows of 2020 are here. This is the middle of the March 2020, when the euro dollar went towards the level of 1.0640. So this is of course the COVID panic selling. If there is still a chance for the euro dollar to jump higher, of course there is, but in my opinion, as far as I can see, we need to hold 1.1167, 1.1153. We need to hold this support, break out of the channel, break above 1.1501. That would be first bullish indication. That would be first like a confirmation that this downtrend is getting weaker, and it might be reversing in the long term. And of course, if we break out of this channel and head towards 1.1662, then of course we might be either entering the bullish market, the uptrend, or it might be some sort of a larger bounce, which will be much more complex in price and time. So the key level still on the key support, still on the chart, key resistance still on the chart on the euro dollar. Let's take a look then at the British pound. This is the British pound on a daily time frame chart, and as you can see, the situation is quite similar. What I mean is that the market is trading inside of this channel, like in the, let's say, middle of the May. That there is some sort of the top here at the end of the May and the beginning of the June. Then we went lower below the key technical support at 1.3514. We made a local low at 1.3195. Somewhere there, close to this three horizontal technical support lines. We bounce back up almost towards the upper trend line, like here. And right now, the market is trending higher and higher towards the extremely overbought market conditions. So this price might correspond with 1.3515, 1.3515. Please keep an eye on the false breakouts. If we will break above the upper channel line, and there will be like a big upper shadow on the daily time frame chart candle, then there is a chance this is a false breakout. And if the next day will confirm this false breakout in form of a big red candle down, that means that was a false breakout, and we would likely go again towards the level of 1.3160, 1.3195. However, if there is a sustained and confirmed breakout above 1.3515, then the next target is 1.3606, 1.3836. So we will be trading then out of the channel, and generally the uptrend here, this is the uptrend, it might be continued. So that might be only some sort of the corrective decline towards, most likely, like it looks like a 38 or 50% of the last move up. Let's just find out where we are right now. There you go, it's 38, about the 38%. Yes, exactly. That's the 38%. We've hit the zone, and that means 38% is not that bad. In case of the retracement, we can travel higher and continue this uptrend that started after the panic COVID selling. So that's the British pound. Let's take a look at some indices. Let's start with the S&P 500 index. The S&P 500 index is still in the uptrend, multi-year uptrend. As you can see, nothing has changed here. We can make some kind of a corrections, like here in the of course March 2020 COVID panic selling. That's a bad thing. Don't pay attention to this. So nevertheless, please notice the fact that after COVID panic selling, this is even bigger and faster and more dynamic uptrend continuation than it was in 2017, than it was in 2019. So we are still under the full control of bulls. The uptrend is intact. We are going higher, and there is no indication yet for this uptrend to be exhausted or about to be terminated or completed. So far, no such clues, no such indication. So please pay attention for any corrections bigger than 7-8%, and especially bigger than 10%. That might start some sort of the correction to the downside. As you can see here, the COVID correction in March 2020 was 35%. That's a hefty correction here. Very, very hefty correction for the market. And then, of course, new all-time highs. Bulls are in control of this market. Nothing changed here. last but not least, let's take a look at gold. The spot gold market is currently inside of this, is trading between these two zones, inside of the range. One zone is between 1658, 1674. This is the demand zone, green rectangle. The other zone is basically located between 1898, 1917. This is the red rectangle, right? This is the supply zone. Let me just extend it here. There you go. This is the supply zone. This is the demand zone. Despite the recent breakout below the short-term trend line, like this blue one, it didn't change the outlook for the gold. It's still trading inside of the range, in this bigger range. And here we have the classical up and down movement that looks very, very much corrective. So what I mean is that the last swing to the downside, last swing to the downside, which I mean is from the blue arrow to the lows of this let's say this candle. This is impulsive. This is corrective in nature, which means that after the short New Year's Eve and the weekend, maybe not in the beginning of January, but soon enough, the bears will attempt to push the price lower again, and any breakout below the first golden trend line and then below the blue trend line will be bearish in the nearest month for the spot gold market. In the longer term, there is no trend on gold. There is no trend on gold. This is a downtrend. This is like a consolidation, horizontal movement. So the gold market is right now trendless after the highs made in 2020 at the level of $2,075 per ounce of gold. So last but not least, let's take a look at the beloved Bitcoin. What is going on the Bitcoin? The Bitcoin is still in the multi-year uptrend. This multi-year uptrend might target the level of $100,000. This is the next clear, the next obvious, the next round number for bulls for Bitcoin. The next target for all of the holders on the Bitcoin market. So please pay attention to this number. Second thing is we need to break above this high here at 69,000. I guess it was 69,000 and something. However, this is the top for the wave 5. We got impulsive 5-wave impulsive count here. This is the impulsive wave. This is a correction. So as long as we trade above $39,000, which is of course the lower boundary of this demand zone, green rectangle, there is still a chance for a reversal and the uptrend continuation. As I said, next target $75,000. Then with the occasional pullbacks and corrections, we might hit the $100,000 in 2022. However, if we break below the level of 39,000, then the target of 100,000 will be much more further in the period of the achievement, right? It will be further in time, because most likely with that, if that level won't hold 39,000, the lower boundary of the demand zone, most likely we will drop as low as 28,964, which is the low of the middle of the 2021. And then if that won't hold, the next key support is around 19,000. And since then it will be cheap enough for market participants to again believe in the up market, in the bull market, and then reverse and go way higher, which means the multi-year ABC or whatever the correction will be, the multi-year correction will be done, and we are ready for another multi-year uptrend, multi-year bull market on Bitcoin. So this is how it looks on the Bitcoin right now. In the short term, of course, if you see the price reaction here, we are locked between 45,429, 51,846. As long as we won't break above this, above the resistance or below the support, we will be trading inside of this range for quite some time. So that's my outlook for the next week and for today, of course. Thank you very much for watching this analysis, and happy new year, of course. So I guess we will meet again early in the morning on the Monday morning 2022. So I'm very glad that we are going to do this again. Thank you very much for watching this analysis. Happy New Year, and see you next time. Bye bye.